CNBC-TV18, celebrating 15 years of leadership.
Welcome back. You're watching Taking Stock, and this really was an incredible week if you were a bear, and this was a week in which bulls would have had given up quite a bit of profits if they stayed with their positions. We spoke to Bibho Kapoor earlier, and now Sudarshan Sukhani joins in for a technical chat. Sudarshan, hi, good to have you on the show. Really, it was a godsend week for the bears. Everything went in their favor, whether it was taking positional shots, selling on rallies, selling on dips, everything worked in their favor. What does that tell you about the market texture, and do you get a sense that the correction might not be over yet?
Yeah, good afternoon. And markets have been in a downtrend. The critical level that was broken was 84.90, below which the trend, according to our reckoning, the short-term trend changed to down, and then at 84.50 the intermediate trend changed to down. And as you rightly said, sometimes when the markets are in a strong bull grip, the trend changes to down and almost immediately reverses back, creating a whipsaw. But this time the whipsaw did not happen and the downtrend persists. This is the first message. There are two messages here. First is there was no whipsaw. Second, the fact that we are now almost filling the gap that was created in October 31st when the markets jumped to 8,200 from a much lower level. So the filling of the gap today is not good news for the bulls. 5 successive down days, large candles, which means large trading ranges, all on the downside, filling of an earlier gap, and the inability to reverse back and create a whipsaw. All of this suggests that there is more to come on the downside.
Okay, two stocks which tried to prevent the further fall, Sudarshan, and one in particular was ITC, second was Sun Pharma. But do you get a sense that even ITC is looking a bit tired now and may not be able to help market much from here on?
For ITC, yes, because ITC's rally is sometimes, well, helped, for want of a better word. Sometimes it, I assume market participants ensure that ITC goes up. Charts are not at all conducive. It doesn't mean ITC is coming down or entering a bear market. It's not. It's probably going to become sideways. Sun Pharma is a much better chart. There is a sense that a short-term trend is beginning on the upside, and it's been an outperformer. It could remain so.
Okay, so let's talk about some strategies for next week then. Some stocks have been hitting new highs every day, irrespective of which way the market moves, and Britannia is one of them. You would continue to back that stock on Monday?
Yeah, actually you said it very rightly, that there are stocks which are hitting new highs. Britannia is one of them. Even in a market that is undergoing a correction, and this one seems to be doing that even into next week, there is no harm in buying stocks that are outperforming, because we are in a long-term bull market. Britannia is an appropriate buying opportunity. The stock has had a decent rally, a normal sideways correction, and probably a resumption. These are not day trades, so you have to be patient with them, but I think they should work out.
Okay, you also have two sell calls for us, Sudarshan, from the broader market.
Well, yes, this market can be sold into. One is IRB Infra. IRB's uptrend is probably over. There was not much of it anyway, and now it's resuming its down move. And the other is JSW Steel, part of the metal spec I spoke about. And JSW Steel is now a weak chart. The weakness is persisting. It was already becoming weak, and lower levels are coming. And again, the metals itself are not good enough. Short selling in the large cap, because that is where the interest is. I'm telling you two side counters. But short selling in the large caps has its own difficulties. So I would suggest the short selling should be done either in the indices, which means the Bank Nifty and the index and Nifty. Both are available for short selling as we speak, for the next week at least, or in the side counters, the type of which I have explained.
Okay. You just said a while back that it would be dangerous to go long on any large cap stocks, but you still identified Maruti for us on the long side. Is it going to be a cautious buy on this one on Monday morning?
I think that's the right word. See, if you want to look for buying opportunities, and I think we should, then Maruti is a relatively safe idea. And I'm talking about an intermediate position, not next week necessarily. So Maruti at current levels, forget about the levels, the stock is going higher. Whether it is before the budget or after the budget or at the end of the financial year, I can't say. But we'll probably see higher levels. It's a relatively easy buy.
Okay, Sudarshan, Jet Airways, is the run over now? Is Friday giving you an indication that maybe Monday would be a good time to book profit, or would you actually, as a trend follower, look to buy the stock at some point?
No, I would not look to buy the stock. The run-up has been remarkable, and today the fact is that the highs were not maintained. Some profits should be taken. If you are a short-term trader, you could actually take all the profits, and you should be short-term in Jet and then wait patiently. The run-up may not be over, but this is not a good time to hold on to your positions. When the stock corrects, if it goes sideways, re-enter. If it doesn't, if it keeps on running up, you've made your money anyway. But I think what you've asked for is a very good question. Jet is appropriate for taking profits.
Okay, one final question then. You told us about the strategy that one should adopt, but just to give us the markers, the Nifty fell 4% in the week gone by. What would be the floor and the ceiling for the Nifty now in the near term?
Well, the ceiling is about 8,400, and that's the point at which we become bullish. So it's not necessary that the levels will be reached. It's just a question of trading strategy or trading tactics. What's the floor? That's far more interesting. Sonia, there is no floor. The way the market behaved today tells us that 8,100 is a final support level. That could hold, and then that would be considered a floor. 8,100 gives way, and that is already we are in a free fall. We can see a second bout or a second round of free falls then.
All right, we'll keep that 8,100 level in mind. Can you give us your disclosure, Sudarshan?
Sure, I do not have any positions in any of the stocks we discussed.
All right, fair enough. You have a great weekend. We'll see you again as always on Monday morning. Thanks so much for all those trading ideas. So those were a whole host of trading strategies that you can work with come Monday. But we have lots of events that are lined up as well next week. So here's Varinder Bansal as always to give us all the key events that you need to watch out for next week. Varinder.
Well, clearly on Monday, markets will be reacting to ONGC and TCS. Also on Monday, watch out for US industrial production numbers. Keep an eye on India Cements because Supreme Court will be hearing a case against Srinivasan. Also, insurance bill will be tabled in Rajya Sabha. So keep an eye on Max India and Reliance Capital. Tuesday, FOMC meeting begins. Hindalco will be important to watch out for because Special Court has a reserve judgment on Hindalco closure report that could be out on Tuesday. Government will also be considering 31 FDI proposals on Tuesday itself. Wednesday could be crucial for Indian markets because FOMC meeting announcement is expected in the evening. HICL is meeting, on that day to consider stock split. That stock has been buzzing last week. HUSC will be declaring results that could be crucial to watch out for. On Thursday, as I said, we will be reacting to FMC news which will be coming out in the on Wednesday. US jobless claims are also being reported on Thursday. DLF versus SEBI case will be heard yet again in SAT. And Friday, Delhi court has fixed Friday for hearing final arguments in 2G spectrum allocation case. So keep an eye on DB Realty and others for that day. But in the global cues, FMC could be the most important to watch out for next week. And our markets will be reacting on Thursday.
Thanks, Varinder. So those were some global and local events that we'll be watching out for from both markets point of view and also from individual stock perspective. But Latha Venkatesh also joins in to give us the details of the CPI data that will have quite a bit of impact on the market Monday morning. Latha.
Well, the industry output numbers for October have been a disaster. Output has contracted by 4.2%, a little shocking because the core sector gave us the impression that output had grown by 6.3%. The biggest culprit is manufacturing, which occupies 80% of IIP. That has contracted by 7.6%, and within that, the biggest culprit are capital goods contracting by 23% and consumer goods contracting by 19%. Within consumer goods, consumer durables contracted by 35%. Well, we already had companies like Havells and TTK Prestige tell us that their second half output is going to be much worse than they thought. They have guided lower. Now it looks like the entire industry will come out and guide lower. So very bad news for stock markets. And you should see the downturn which we have seen for the better part of this week continue on Monday as well. The CPI numbers were good. 4.38 compared to an expectation of 4.4 is welcome. Within that, food inflation has fallen to 3.14 compared to 5.59 in the month of October. And non-food, non-fuel inflation, which you call core inflation, has fallen to 5.5. That's good news. But on Monday, you can expect the stock markets to concentrate more on the bad IIP number.
All right, that's the sum and substance of all that you need to watch out for next week. And as always, Anuj and me will be with you on Monday morning. Have a good weekend.
CNBC-TV18, celebrating 15 years of leadership.